Hi, good day, all. Welcome to another exciting session of Digital Success Exchange. My name is Vishal. I am the Chief Growth Officer for IndusNet Technologies. And a brief about Digital Success Exchange. This is an initiative by IndusNet Technologies where we invite industry leaders to share their views on the challenges and opportunities in the industry and talk about the solution and the change that brings in real success. We have had 50 plus video sessions, podcasts with 2 million plus social impressions, 80,000 plus people included. So exciting stuff having here. And on today's topic, which is the top few challenges in the insurance industries and the solutions for them, I would like to invite my dear friend Krishnakant Gaitonde, who is the Senior Vice President for Edelweiss Tokyo Life Insurance. Krishnakant, welcome to this session.
Hey, hi Vishal.
How are you
Pleasure
doing
being
today?
on the show and thanks for having me here.
Fantastic, fantastic. So, Krishnakant, before we start on the topic, World Cup quarterfinals today, any favorites?
Uh, my favorite team crashed out. I would have been rooting for Germany, but
Uh-huh.
now I'll probably settle for the second best. I will root for Argentina.
All right, all right. But this time, what we are seeing is it's the David versus Goliaths, right? Few Davids like Japan, Morocco, South Korea, doing very well against the Goliaths like Brazil, Argentina, and so on. And getting into the topic, this is something that I see in the insurance industry also, right? Several small players coming in and disrupting the whole industry. So I would like to hear from you. What are the few challenges and opportunities that you see in the insurance sector now?
No, sure. I think in the kind of times that we live in, the VUCA world, as we call it, no longer can any player take his place for granted. I think all of us have to be nimble and on our toes all the time. So, in sports as in life, I think we soon discover the new order and how we have to still stay on top to survive and to make sure that we are on top of our game.
Hmm.
So we are
I agree.
learning.
Yeah, yeah. And what are the various opportunities that you would want to talk about, right? Because in the Indian insurance industry, for example, uh, the penetration, if I see the premiums as compared to the GDP is 4.2% only, right? It can grow a lot. So how do you see what is keeping it down, and what are the factors that need to be worked upon?
Sure. I think what we discussed, the new players and some of these insurtechs that are entering the market, they are nimble. They do not fear to go where no one has gone before.
Hmm.
They are offering some way of trying to make niche segments and niche offerings in the entire value chain
Hmm.
and challenging the existing players. So, for example, you touched upon the under penetration of insurance in the Indian market. Largely, insurance being an intermediary driven business, insurers were limited by the size of their distribution networks.
Hmm.
Correct? And distribution networks, a pan India distribution network, very few can probably boast of having.
Right.
Typically, one would be limited to small pockets, tier one, tier two cities, and maybe an extension by a point of presence in some of the tier 3. But what we are seeing is the insurtechs, the pocket sized insurance offerings bundled along with e-commerce. These kind of things are actually enabling the outreach to a larger segment.
Mm-hmm.
One other point of observation I would like to make is you are having the rural masses. They have been an underserved and untouched segment purely because the cost of reaching them is extremely high.
Mm-hmm.
Correct? But digitization now offers us the ability to reach out to them. Most of the growth of the e-commerce players in the last 12 months has come from tier 2 and tier 3 cities.
Yeah.
So if they are adopting to digital for buying goods, they might be amenable to also being served for insurance buying as well. It's an opportunity. And we see that emerging.
Yeah. And you rightly said, see, what's happening, the way I see is in the last 1 to 2 years, the number of people served or covered has increased from say 12 crore in India to 23 crore. So things are moving in the right direction. Possibly a lot more needs to be done, right? And you touched upon that there's a large sector of underserved segment. Technology is helping bridge that gap a little. So would you like to talk a little bit more about how technology intermediation and digitization is going to help this? It's already helping to some extent, but how we see future growth in this?
Sure. I think technology in itself has also undergone a lot of transformation.
Hmm.
Earlier, we were accustomed to enabling a sale. We are now seeing the move to or shift to driving the sale.
Yeah.
Correct? And a lot of the insurance buying, at least in the aspirational middle class, etc., is happening by doing self research online,
Hmm.
by comparing online, by trying to understand product differentiators,
Hmm.
by mapping it to their goals.
Hmm.
I think technology plays a huge role in enabling this section of consumers to become more prepared, better prepared for the buying in terms of information gathering, in terms of comparison, and then also assisting in a frictionless sale process.
Hmm.
Right? I think a lot of consumers' primary grouse would be the amount of friction in some of these transactions, be it a home loan, be it insurance buying. The amount of paper and the amount of processes are often where you have a lot of drop offs happening. I think today, with the regulator also allowing for eKYC, CKYC,
Hmm.
enabling new rules and new processes is something that now technology has to drive within the insurance organization. And of course, we have to drive it whilst enabling a change. We have to coexist with the older processes because some of the older generations and some of the older intermediaries will continue to do business in the traditional way. So that's
Correct.
how the technology team has to step up to the plate and deliver.
I agree, and you made a good point. Technology is not just an enabler now; it is becoming a driver, right? And COVID has shown us how companies that enabled their workforce to quickly adopt to technologies survived, and not just survived, thrived, but others faced a lot of hardship. And now CEOs and CFOs don't go to technology to say, hey, you are a cost center for me. They say, some of them have started saying, we are a technology company, and by the way, we sell insurance policies, right? So that is where we are coming to. Another point that you mentioned is just one channel won't be good enough, right? There are agents, there is technology, there would be newer ways of distribution, bank assurance, etc. So would you like to talk more about the new channels and distribution mechanisms that we are seeing and that we see driving the insurance industry further?
Sure. So I'll probably break that into two or three different channels. I think
Mm-hmm.
the the owned agency, has traditionally been the strongest channel for the business. The
Mm-hmm.
person to person intermediation and explaining of the product does work well for the older generations, and I think the generations that are doing more insurance buying. Right? The online channel is the emerging one, and maybe in the next 10 years we'll see a gradual shift to the other side, where the bulk of the buying will be happening through the online channels, be it on the website, be it through some of these WhatsApp, or through some of the searches and search enabled buying nudges, right? So those are the online buying, where the customer is aware, is doing his research, and then coming to buy. And then the third channel, which is definitely gaining in the Indian, at least urban spaces, is the brokerages and the corporate channels, which is the
Mm-hmm.
brokerages, the banks. These are the intermediaries who are the trusted source of financial advice for the customers, for
Mm-hmm.
their customers, and they have a loyal set of customers. The customer relies upon that particular channel for all his financial needs, or at least advice on all his financial needs. And those are the intermediaries who are therefore at the forefront, pitching some of the insurance products to customers. They know their customers well. They know what the level of protection, what level of uh, life goals the person has, and
Mm-hmm.
therefore they are able to pitch the right product to fit that particular need, or that particular buying capacity.
Mm-hmm.
So these are the, I think, the channels that we see as the ones that will sustain. There are one-off spurts that are, for example, when COVID happened, you had a huge spurt in buying, and that was skewing some of the mix
Correct.
across channels. But I
Right.
think that that's a temporary phenomenon. As we see behaviors emerge, these three channels will continue to uh, sustain. Although, like I said, the percentages might vary, and slowly the middle channel, which is the self-buying and the well-informed consumer, that one's likely to grow.
I agree. I agree. And see, this is how I see insurance, right? Insurance is nothing but trust. People don't get up one day and say, hey, I want to buy insurance, right? They would have thought about it. They have inherent needs. They are managing the risk that different uncertainties in life is bringing to them. And once they do that, once they start researching, they go through a funnel, right? It's about awareness, it's about interest, it's about consideration, and then commitment. So the channels that you mentioned, starting with agents, agencies, and so on, these are trusted people they would want to work with. The banks who are taking care of their financial needs. Banks are, as an institution, considered as a trustworthy institution. They would do it. But where it's most important, and probably for multiple reasons, technology has grown fast. The cost structure of the agents and the intermediaries might not be good enough. So hence people are moving towards technology also to do more self-service, right? uh, People and that comes to takes me to the next point, that there is a new segment evolving, which is buying insurance, right? Earlier it was done by the head of the family, by men only. Right now, women are buying insurance directly for themselves and their families. There are smaller firms, MSMEs are buying, and not just the big corporates. People are buying it on the go, right? My car insurance, okay, it has expired. I can do it on an app now, right? So, how do you see this phenomena with the whole new segment of buyers coming in? Where will it lead to? And what products should insurance company work on so that they can grab this opportunity with both hands?
Sure. So you're right. More than just the head of the family, now insurance buying is an individualized and personalized decision. and the channel or the way by which that buying is happening is also no longer uniform. So depending upon the age group, the gender, and the social circles in which the buyer is moving, the sphere of influence, and hence the first product or the first company to research happens to change from person to person. Right? Just a second. There's a phone I'll have to mute. Sorry for that.
No worries.
So, coming back to where I was, so it is important that we address this particular need in two ways. One, for the individual that is buying, if it's a teenager, it's a college going kid, or it's a person that is just stepped out into the working class, and therefore he is looking at a specific goal, right? And we need to understand the goal and have a product for him. There needs to be product innovation. The
Mhm.
traditional products of only offering protection or only offering investment product that will grow in tune with the market, that kind of thing will no longer suffice. It actually has to be now specific products for specific needs, either goal based or cohorts. We define those cohorts, and this is the cohorts you are able to define what type of products will be making some sense to that particular group of people or that particular segment, right? The second part is the way in which these various individuals would be doing their buying. So traditionally, the agent that was a trusted advisor to the head of the family on all
Mhm.
financial matters was probably the best person to advise on products for the kids and for the grandkids as well, if it came to
Oh, yeah.
that, right? No longer so. So the grandkids are not likely to listen to that agent. They are likely to go online and do some research.
Yeah.
Now, they are also likely to, like I mentioned, be influenced by the certain set of friends, peers who will talk to them about the product that they bought. It is important for us to be available at every touch point that this segment of consumers is likely to go and do research upon. So that is what I was mentioning earlier. The
Right.
need to enable information, and then when the person's made up his mind, then to also enable or facilitate a seamless transaction. So a lot of digital buying through the website, through an app. Sometimes it's only going to be via the mobile phone. The person's not going to go to his laptop or the pad and open up the thing. So
Mhm.
how do you facilitate that kind of a sale as well? That's something that we need to constantly focus on.
Correct. So you talk about an interesting point, Krishnakant, that the whole thing about customer experience, right? And earlier insurance industry was considered to be a bit boring, right? Yeah, there are only agents who are working and they are constantly selling, doing a hard sell and so on. Now it is not so. Now we see that if an app is not working, if you don't have various products, various financial models, say earlier, why I say insurance was boring is also you had just an annual premium that a person had to pay. Now it can be daily premiums, small amounts, micro insurance is coming, right? So I would like to hear a little bit more on the customer experience. How is that playing up in companies like Edelweiss Tokyo and your peers, and how serious the companies are to improve the customer journey and customer experience?
Sure. So when we talk about the experience itself, right, of buying, I think the customers, especially the ones that are buying online, are now spoiled. They actually have been acclimatized to the e-commerce experience, an ability to browse through products,
Mm-hmm.
to customize that particular product offering for their own need, ability to check out very quickly and complete the sale, and then the post payment, the service delivery has to be impeccable, right? And that is the expectation that they bring to the online buying of financial products as well, be it mutual funds, be it insurance, right? In some of our cases, like the general insurance space, you yourself mentioned about buying car insurance online, correct? Where the risk is very well understood, the process is fairly easy to enable.
Mm-hmm.
And in some cases, like life insurance, where the entire risk assessment also has to go through maybe multiple levels before it can actually be accepted, there has to be a way by which the customer expectation is still not violated. You do not want to disappoint the customer.
Mm-hmm.
So whilst we can do that kind of internal pushing of the threshold of the envelope to try and make sure that the customer experience is as seamless as possible, there are still certain limits that we have to grapple with, right? Some certain internal controls and risk tolerances that we will have to work around. However, the entire process of doing a buy online, we still try to facilitate through enabling the customer to appreciate that, hey, you asked for a cover of 25 lakhs. If you are willing to sign up for 20 lakhs, then the policy can be issued in the next 20 minutes. It will
Mm-hmm.
be issued to you, and the cover commences immediately.
Mm-hmm.
For a higher risk cover, you might have to just undergo some medical test. Or
Mm-hmm.
alternately, asking the customer to volunteer certain amount of information with respect to his financials, with respect to uh, his own digital identity and KYC, etc., can be done online. We have discovered that customers are willing to share that kind of information online in order to make their process instantaneous.
Mm-hmm.
They are very keen to share that, and they don't mind doing that if it will ensure a faster turnaround time,
Right.
right? And we are happy to make sure that all of those capabilities are brought to the table on our website or on our app to get the customer the experience he wants. But this is
Mm-hmm.
all in the buy online space. Servicing is a completely different gamut altogether, let me assure you, right?
I agree. I agree. And then another interesting concept that I always believe is, see, there's something called as fast money and slow money, right?
Hmm.
The whole fast money is about getting instant gratification. You do something quick, e-commerce, social media, and so on, right? And you have financial products that you use now, peer-to-peer transfer, and so on. Slow money would be something that is very important for your life, but it will not be that exciting, and you will have to do more analysis on that, more risk and research, right? So insurance falls in that bucket, retirement falls in that bucket, your savings and how what you do with your savings falls in that bucket. So as you rightly said, that yes, while folks might want everything instantaneously, they need to understand that it's important to research on these products, because they will they might save your life, right, if you get access to the right product at the right time. So that is important. And hence, I come to another point where I see we have some questions also. Sumit Narwal. So he's asking a question, sir. Do you feel insurance players have traditionally been slow to adopt to innovation and technology? So Krishnakant, views from your side, innovation. What innovative things do you want to talk about that you see again in Edelweiss, Tokyo Life Insurance, or your peers adopting?
Sure. So I think I will have to take that. I agree. Insurers were a bit slow on the uptake of new technologies. However, I think it is changing now.
Mhm.
Like you mentioned, the bit about fast money, or the bit about the new breed of consumers who are expecting instant gratification, who are likely to vote with their feet and walk out in case the service levels are not up to the mark.
Yeah.
We are forced to therefore make sure that we are able to enable as much of the satisfaction to such customers and prevent that from happening, right? A large part of the insurance experience for the consumer is not just in the buying but also in the next 20 years in the servicing, in the
Hmm.
ability to do renewal payments, in the abilities to enable service whenever the customer demands it. Not like you drop a paper form at our office or at our branch and then we'll get back to you after 3 days. That approach doesn't work anymore. So trying to drive straight through processing for servicing for renewals, trying to ensure that when the customer wants to reach out to us, we are able to enable a quick response, at least a holding response, if not a resolution of his query. All of these are definitely something that all insurers are working on at this point in time, right?
Hmm.
So for all of these, I think primarily the ability to scale up rapidly and to be able to try new things every month or every quarter and introduce new servicing capabilities, reach outs, etc., has
Hmm.
become imperative. Hence, adoption of cloud, I think, is something that all insurers have already initiated and very swiftly gotten onto. The
I
next
agree.
is
I agree.
the
And
chatbots.
go
Sorry,
ahead.
I complete. And you want to be able to respond to the query whenever the person asks you a query, on WhatsApp or on the website or even through a RM at a bank, who's his bank. But you still want a response which seems like there is at least some meaningful response coming in. Like I said, it might just be a holding response, but much more than a holding response would be appreciated to give you some answer specific to your need. If it results in a nested another interaction and that one necessitates something else, then that's different. But at least the first response is given to him instantaneously. So adoption of chatbots, AI, ability for the person to give some details on WhatsApp and get a response immediately, ability to
Hmm.
get premium receipts for his tax filings immediately on
Hmm.
WhatsApp. All of these are some of the use cases that again insurers have been adopting very quickly, and there is more efficiency for the insurer and better customer sat as well.
Right. Another thing, and then probably that is also a reason why innovation and technology adoption has increased, this whole shift from public to private companies, right? If we look at Indian insurance industry, there are 24 life insurance, one big giant LIC, of course, covering 65 to 70% of the business, and there are 23 private players. If you look at general insurance, around, I think, 27 players there, six public companies, and the rest are private, and so on, right? But the percentage of private companies are increasing, and hence the competition is increasing. Government is also being supportive. They are opening up sectors, increasing the FDI. So do you see this increase in privatization also leading to more competition, better products, and hence innovation?
Oh yes, definitely. I think it's a good thing for the consumer because there
Yeah.
is better choice. But yes, definitely with the introduction of the private players and some of these innovations, etc., that the private players were able to take up, both in the terms of the product, in terms of pricing, in terms of different channels, trying out different channels for reaching out to the customer. It has benefited the customer and also probably grown the industry. And over the years, we have definitely seen a shift. We have seen the market share of the private players combined
Hmm.
growing. No mistaking that the PSU giants are still giants, but
Yeah,
yes, the Davids are emerging. If I were to take that analogy of yours,
I
we
agree.
definitely see it.
Right. And also, to put into context, see, when we talked about that, is there a large underserved market in the Indian insurance industry? Definitely there is. If we look at numbers, 4.2% of premium versus GDP, while on an absolute term it might look a small number, but you know what, the global average is 6.8%, right? Even in developed countries like US and so on, it is 12%. Taiwan, it's 14%, right? Germany, it's probably around 5% or so. So it's not that we are doing too bad, but it's also about comparing premiums versus number of people and so on, right? So a lot can be done. And there comes my next question about insurtechs, right? We talked about technology, but now there are newer players who don't have the baggage of existing players, right? Who are digital first. In India, for example, last year there were two new unicorns in the insurance industry. So, how do you see the role of insurtech uh, making India an even stronger player in the world insurance industry?
No, surely. The insurtechs, like I said, have a niche offering to make. Some of them have identified that sweet spot or that particular part of the value chain where there was almost zero to little presence or little offering from all of the existing players,
Hmm.
and they do not hesitate to venture out, and they do not, like you say, they do not carry the baggage of excessive spends on branches, on their own agency. They are nimble in terms of trying out product innovations, etc. So they are able to definitely make a dent, and that offering can somehow be the driver for their business. A couple of them are now trying to turn into full blown insurance
Yeah.
entities, right? But that apart, the fact that they meet an unserved need and they are able to automate that particular process has meant that a lot of the existing players are very keen to tie up with them and offer that particular service to the consumer.
Hmm.
So the insurtechs play a role. They offer efficiencies and some capabilities that were missing from the ecosystem of the insurer. And definitely, it's a win-win situation for both the OEM, the manufacturer of insurance, and the consumers as well. The insurtech
Right.
sits neatly in between.
Right, right. And one point there. So we at IndusNet work with a lot of large insurance companies globally in India. We also work with insurtechs. What we have seen is that the pie is big enough for a lot of more players to come in and disrupt the industry. We ourselves as a company have developed several modules, several accelerators that we take to existing insurance companies, to insurtechs, to banks, because they are also providing bank assurance now, to see where is the gap and how we can fill that gap very fast, right? So the whole uh, open finance, as I would say, that an API based economy is important, that you don't need to buy the whole system, but you can make it modular. You can coordinate with the insurtechs to have the best of breed. And I would like to check a question. Sayantan Nag is asking, Google says low code, no code, and API economy will rule the insurance industry in 2023. Is it so? Krishnakant, what do you think?
I'm sure. I think all of us either have to disrupt or get disrupted. So if we have to make offerings at the pace at which the consumer is demanding, we have to devise means by which we can move very rapidly. And yes, low code no code platforms offer us a ability to try our hand at some of these offerings and in an agile way then scale up if the offering finds or resonance in the market. If not, you have to move on to the next one. So
Hmm.
yes, that will be a matter of importance, if not an imperative. And in order to meet that kind of need, insurers like ourselves will have to adopt to some of these platforms. We will have to adopt to the cloud. We'll have to adopt to low code, no code platforms. We will have to adopt to tie ups with some of these insurtechs that are already having a significant set of consumers in their pocket and are able to withstand changes. So we probably can tie up with them, but all these will have to be tried out. There is no one way to meet the consumer needs.
right? And then I want to segue now into the whole world of analytics, right? And you touched upon a little bit about AI, ML, uh, on WhatsApp-based analytics that is happening. So help us with a few use cases that you see very prominent in the analytics space in insurance.
Sure. So traditionally, we were using analytics, or if I might call it basic analytics, to try and drive certain customer segmentation, to
Hmm.
drive the product mix, and hence influence the right amount kind of selling, and maybe sales performance. And maybe that was the extent of whatever analytics we used to do traditionally. In recent times, however, what we have observed is, apart from simply using analytics for post-mortem of the buying behavior that's already happened, we are now doing a lot more of analytics on the consumer, on the prospects, on
Hmm.
risk assessment of the prospect, even using some of this information for pricing. So our some of our products are now based on analytics of the consumer behavior to drive differential pricing for that consumer. Right?
Hmm.
We have all this risk based pricing and customized personalized pricing basis how often does the vehicle be used, how many kilometers does it run,
Yeah.
right? Or similarly for the individual user, how fit does he stay, how many active days in a month does he have, how many kilometers does he run every day. All of these are something that we derive upon, not just to give the individual a better experience, but also to harness that information to better our product offering in the next version, or in the subsequent renewal, all of that. Similarly, risk-based analytics, we used to earlier only do segmentation of geographies or certain areas where there is a higher risk of fraud, etc. Now we use it a lot more for our intermediaries segmentation, for trying and identifying cohorts and a certain segment of consumers that are maybe fraud prone. We use it for identifying certain of our intermediaries that probably are working well and therefore can work even better. A lot of these kind of analytics, which were earlier not thought of because the tools at our disposal were limited, are now coming up with the latest offerings that we have on the warehousing and the analytics side.
Yeah. And the way I see Krishnakant is technology is moving much faster. It's we humans who are not able to make the best use of technology, and people who are leveraging not just traditional ways but leveraging design thinking for identifying problems that did not exist or people are not talking about and solving them faster. They are the best ones to use analytics. You also mentioned about prospect analysis, right? So that would help in doing NBOs, next best action, next best offers, and so on for the client based on their spending pattern, based on their lifestyle, based on what they are even searching on the internet, right? So it is very interesting of how things are evolving, leveraging analytics. And it's also about predictive pricing, right? If you do this, then you can do this, and there are scenarios that are coming in. So that is very, very important. Another point that I would like to talk about is the whole personalization and customer journey, right? We touched upon it a little bit, that how millennials or how new sectors of customers are looking at. But how important is it for personalizing the whole journey when the trusted agent is not there? how are companies personalizing the journey for the customers in wage insurance?
So there are two aspects to the personalization. One aspect pertains to customizing or personalizing the product basis the consumer's life goals, a goal based selling of the
Mhm,
product.
mhm,
You would probably have encountered it in an interaction with a RM of any bank, right? So when the agent's not there and and a person is doing a research for a product, he is still most likely doing it basis some goal. Either he is looking at protection because there is a certain set of dependents and a certain lifestyle to maintain, or he is looking at a certain goal in the future for children's education, for his own retirement, etc. And then you need to try and fit in either one or a combo of products to meet that need of his or that specific need. Right?
mhm,
We offer tools now to enable people to do their self-assessment of the goal and basis that try and pinpoint on a product or set of products. So that is one level of personalization that is offered to the aware consumer to do himself. The second set of personalization pertains to the entire process of post buying, right? So whilst buying, the individual has volunteered as much information and arrived at a certain cover and a certain premium. How do you now personalize the experience for him thereafter? So I alluded to the driving based change of premium, right? I also just touched upon how a person staying fit, a person that is signing up for annual health checkups, a person
mhm,
that is going in for certain marathons or certain public events like that. All of these are events that we can very easily read and use to try and offer the person a rebate in the premium when he comes up for renewal, right? And as compared to a plain vanilla product, because the consumer is very much aware, he is aware of offerings in the market. If he sees that his peer is able to get a rebate in the premium for a healthy lifestyle maintained and he feels he is doing the same, he is naturally bound to think that he is being shortchanged if he doesn't get a similar benefit, right? Similarly, when it comes to trying to register a claim, if he hears that somebody, one of his neighbors, when there was a car crash, was able to simply upload a photograph of the crash and get a instant assessment slash quote on what is the likely cover that the company will bear out of the total damages, he is expecting a similar kind of experience for his own car cover as well. Correct. So these are the personalization demands or expectations of the consumer, and products like these are already available in the market, and each one of us has to try and now keep up or match up to those expectations from our existing customers too.
mhm. And
So
then you
that's
rightly said, and for all the people who are listening, uh, going to a gym, eating healthy, and so on is not just good for your health; it's good for your wallet also, right? You will save on the insurance premiums. So if you find no other reason to be healthy and to go to the gym, this can be one of the reasons because we are all buying insurance, right?
correct.
So we should, yeah,
It's a
we
trend
have,
that's catching on. It's a
yeah,
trend that's really caught on in the last couple of years after
it
the
is.
pandemic.
I think in good behavior, be it are you driving in a safe way? There are tools that can monitor your driving habits, right? There are variables companies insist that we would be capturing the data that how fit you are, right? And that will drive your insurance premiums and so on, whether you get an insurance or not. That is the thing that, because see, ultimately it's about risk management and underwriting. They are doing so much of underwriting of the risk. They need to ensure that they are making money from the people they are giving insurance to. So if you are doing the right behaviors, you will get benefit. If you are not, you will be penalized. It's as simple as that.
Correct.
Yeah, we have more questions from our folks. So Sujay Datta has mentioned, "Hello, how can blockchain make an impact on the insurance industry?" Krishnakant, what's your views?
So that's a tough one. I think the life insurance industry has struggled to try and get a use case that can stand up to that particular demand. But on the general insurance side, I think, and especially for the PNC carriers, there's definitely a lot that can be automated and a lot of paperwork that can be eliminated purely by the virtue of the blockchain.
Mm-hmm.
So, be it the entire insurance of cargo and shipments, be it enabling a certain amount of health insurance and health records of an individual, okay, or be it the entire transaction where there are handoffs between parties and therefore basis that an ability to ensure that that event happens. These are all cases where the multitude of transactions between people leads to inefficiencies in the turnaround time.
Mm-hmm.
And therefore, if there is a blockchain enabled way of monitoring and confirming the completeness of the information or the transaction, the ability to complete and therefore offer that particular cover at a cheaper rate is very much there, right? Eliminate the paperwork, bring in more efficiency, and also some level of self help by the guys opting for the cover. So I think, for example, in the health insurance space, what I just referred to, there's a lot of this entire process of the hospital has to upload the medical records to the TPA assists in arriving at the right level of cover that can be offered given the fact that the patient has a certain condition and therefore what is the extent of cover that the insurer will cover. And whilst all of this is happening, the patient is actually waiting for the confirmation so that he can go get a go ahead for the surgery.
Yeah,
Imagine
yeah.
the fastest way that would be that there's already a blockchain enabled health repository, a health record, and the hospital to which he is currently admitted is simply able to refer to that record and also submit the latest set of records for the insurer to confirm.
Mm-hmm.
All classic use cases, I think, enabled in the insurers overseas. We are seeing a gradual shift here. But yes, in life and probably annuities, I do not see, at least as of now, I do not see a use case. Annuity
Right.
space maybe at a later stage to ensure today that is also a thing. No? You need to ensure that the person's alive and still eligible for getting the annuity payout. So maybe
Correct.
verification can happen on a blockchain, but that's the limited use case.
Yeah. And as I mentioned earlier, that probably technology is ready, but humans are not, right? And I was talking with a few CIOs in the last few days in the insurance sector. They told me that probably a few years back, some of the insurance company came together to form an association to drive some blockchain related use cases.
Really
uh,
interesting.
I think there was not enough support from some sectors of the industry, and hence that did not work out. So now people are trying it individually, but unless and what's blockchain? It's a decentralized ledger, right? That each person is trusting one another, but the system has to be such that they are sharing the data, and hence security can increase, immutability can increase, the costs can decrease, and so on. Yeah, Krishnakant, you mentioned several use cases that it will enhance the speed, it will bring down the cost by removing the intermediaries, and so on, and ultimately a good experience for the patients and for all the parties. But I think there still needs to be more cooperation between the industry players to make it happen. That's how I feel.
Correct.
Right. I see another question from Chandan Sharma. He asks, how machine learning or AI can help in automating or faster claim settlement. You did refer to that, Krishnakant, but on the specific topic of faster claim settlement, because that is what the patients or the patient's relatives, friends would be interested in. So, how is AI and machine learning helping in automating for faster claim settlements?
So the classic case of either recognition, voice recognition, or recognition of the whatever is the informations that has been shared, that is, I think, very much already in place. A lot of the claim settlement and a couple of insure techs have also facilitated that. So hospital claims typically is a huge sheaf of papers that you receive, right?
Mhm.
Even scanned images, it's a huge bunch of material to go through. Some of these insurtechs have gone ahead and done some AI-based scanning, identification of key values, and therefore creating a summary or a transcript of that entire bunch into a readily usable summary for the claims processor. So
Mhm.
this is one of the use cases that I can tell you, assure you, is already prevalent, and it made a lot more sense also because for individual companies to invest in that capability and try to build it on their own was probably not worth the money given the number or relatively lesser number of claims that one would be getting, right?
Mhm.
However, the insurtechs, like I mentioned to you, neatly fit into that space of saying, "Hey, here's a automation. We are able to offer it to you on a per transaction basis, and
Yeah.
in turn, you are able to give a better turnaround time and a better experience." So that one has definitely taken place. Some of the ability to go beyond simple rule based assessments, right? So today you have STP rules for onboarding, you similarly have a set of rules for even claims approval. But if you want to go beyond the rule based assessment of claims and need to get into smarter ability to take care of some of the exceptions, not the high exception where it's a very complex case, but a certain deviation from one rule, right? Now, what will happen is a deviation from a rule will automatically go to a manual, and then the
Mhm.
manual processor still has to look at the claim and say, hey, you know what, 90% of the parameters are still within acceptable limits. This one particular thing made it fall out and become a eligible case for manual. But
Mhm.
given the fact that condition A, B, and C are met, I can probably allow for this deviation.
Mhm.
Now, this is nothing but an additional rule, or this is nothing but a bit of learning that has to be incorporated. And over a period of time, if we keep seeing this behavior happen, then that's probably what you need to pick up and incorporate into the rule sets.
Absolutely.
And this
Absolutely.
is
And that's the
exactly
classic
what
case
ML
of
is.
machine. Yeah.
Okay.
Right. So, and
So
that's the classic case of machine learning that if it has happened a few times, then maybe shift it to the green versus the red part and make it go seamlessly.
correct.
All right. Thank you. And then we have another questions from Shikha Malu Surana. Is there a scope for private and public sector insurance companies to come together for faster claim settlements? Right. So here we talked about the companies working with insurtech, but this question is about how the private and public insurance companies work together. So what do you say, is there cooperation between the private and public companies for a faster claim? Because maybe sometimes people have multiple insurance policies, one with a private company, one with a public company. Probably that's what being referred to.
So I think there is, since we are all competing, there is very less chance of a partnership of that nature happening by itself organically. But if the regulator mandates, and the regulator has been pushing for quite a few innovations in the space of insurance intermediation, in the space of trying to drive standardization of product offerings. So if the regulator is able to mandate or put up some kind of such push for such a forum, then there is a likelihood of the partnerships happening. A case in point is when we had the whole thing about trying to create a digital repository, a DigiLocker, and e insurance copy, right? That was something that the regulator mandated. Today, all of the insurers, even whilst they are sending out the physical copy, are also going ahead and dropping a copy in the e-locker for the customer.
Hmm.
So
Right.
it probably is similar that if you were to get the mandate from the regulator, it will simply accelerate the process.
Right. And I believe the government also has a role to play, as you told about the insurance regulator, because the whole, for example, in health side, that the whole national health stack that is coming up and the way they are standardizing things, some of the policies that are coming, right? I think it's called Saral Bima, that they launch, that it will have same terms and conditions and everybody will have to provide a standard product, right? So those kind of things are a little top down, but I always feel that there's enough for everybody to do. And if uh, companies and parties here start collaborating more than just competing, the pie will get much bigger, right? So we are almost at the end, Krishnakant. So any final words? Where do you see in insurance industry going in the next few years, and what should people who are refraining from getting into the insurance industry, what is the message for them?
So I think we are actually at the cusp of the space where insurers are going to be competing really aggressively for the share of the wallet. Digital will drive the future. How we are able to attract and hold, not just attract but hold our consumers, because unlike the past, it is now even more challenging to retain the customer, right? And persistency of customers has been on the rise as compared to traditionally where insurance products were allowed to lapse. Now we are seeing a far greater tendency of the consumer to persist with the insurer, but they are equally okay to walk out from that insurer and shift their entire portfolio to another insurer if it is not meeting their requirements. So I think exciting times for the technologists in us to keep up with the demands. And also, fortunately, what was mentioned earlier, we have probably been slow on the adoption, but now that the entire momentum has started, there's a lot and more to be done, a lot more in the digital space, and that will drive the differentiators.
Right. All right, so this brings us to the end of another successful session for Digital Success Exchange, an initiative by IndusNet Technologies. There are a lot of such discussions and talks that you can go visit our website and see. So, thank you, Krishnakant, for taking time with us and sharing your experiences and guidance. Appreciate it, and wish you a good day.
Sure. Thanks, Vishal, for having me. It was definitely a wonderful interaction. I loved it.
Thank you.
Thank
Bye
you.
bye, all. Take care.